Hi traders, hope you guys and girls are doing very well. Just going to do a quick video on a trade that I took yesterday on the 13th of November. Now markets haven't been the greatest. I think the theme of today's video is more about how to adapt during these market conditions more than anything else, right? We all want to have the perfect entry, we want to have the perfect setup, but we understand markets aren't always going to be in that great condition to give us that, right? So we want to make sure we adapt with the market sentiment. I think it's just making sure we know what it is we need to look for, having that clear checklist of saying, right, what market sentiment are we in, what assets are doing during that session, whether that be the US or London, what markets do on average in terms of movement, and just really taking advantage of it. So we'll go straight onto it. I mean, this is the Dow Jones on the screen here. Now, this trade, as I said, was taken yesterday on the 13th of November. And this is the hour time frame. Now, to do it justice, we first need to know where we are on the daily. Now, if we look at the daily time frame, as I mentioned, not really the greatest context, right? That's the 13th. There on the daily, you see prices very much a few days after the election, right? So we have the 5th of November over here. And then it was, obviously, we had market makers pricing in the fact that Trump was going to get elected. It was then officially announced as the US president, and obviously the price continued to move to the upside. So straight away we can sort of see we're on the back foot in terms of the context of the market. We are very, very high up. This in fact is last week Monday. That's when the market made the highest point in the history on the Dow Jones. That is literally the highest point. So this analysis needs to be done when we go into the actual trading session to understand, right, where are we in the market? Are we at an area where there is a high probability that we're very low and the market will continue to go up, or are we trading around the highest point possible where the markets may start to retrace as it is as we're speaking right now? So going into yesterday's trading day, if we look at the actual US Open, what you can see here, the price obviously starting to move back at the start of the week. What we start to see intraday, if we really go into the lower time frames, what we can start to see that the buyers will really start around this price level that I've highlighted, and the buyers will start to take control. Now, once we've done our analysis, once you know the concepts of the chart, it's very, very choppy. Depending on how you trade. So I'm very much an intraday trader. I'm looking at what the conditions are that session alone to make any decisions. And if we actually look at the lower time frames on the Dow Jones here, what you can see is straight away after the open, markets are, naturally let the market open up, right? You can sort of see the buyers have had a swing of price a few minutes into the US Open. The sellers then took control, but what you can then see is by recognizing that we are relatively low, you can see prices hitting this level highlighted, that as soon as the buyers stepped back in, this is why I entered the trade, and you can see it was a quick 47 points on this trade, so just under 50 pips, and that was a good trade considering the actual area that we're in. So you can see this is a 1 minute time frame, and that 47 pips was made in, it was a 2 minute trade, really just trading momentum. But had a keen eye on looking to be a buyer at these lows, right? The indices, if you bet against the indices, you'll get high. The US equities, although they do go, of course, they give us retracements. You want to make sure you're well positioned for those retracements. You want to make sure you're very well ahead of the curve, and you want to try and get in to ride the whole wave. But with the US equities, you never want to try and get in super early. Don't want to get in and try and sell too late in that movement. So okay, so that was the trade on the back of yesterday's trading day. It was a very quick in and out trade. Moving forward where we are today, you can sort of see the context isn't the greatest. If you look at the daily time frame, price is very much in this daily turning point. We may in fact start to see a bit more retracement come in. However, we need to let price break out of these areas. In terms of how we would trade this, it's very dependent on what we have at the open. If we do start to see the equity start to sell off from the actual open, and it clears these lows, clear these levels, we may see that continuation. But until then, what we don't want to do is get too premature. We don't want to give our capital away for the sake of it. So, sitting on your hands might be the best option until we get cycles, until we get clarity where price is trying to go. So, brilliant. But anyway, hopefully that made sense. Like I said, with these choppy conditions, sometimes you just got to first recognize where you are in the markets. Is it messy? Is it very choppy? And if it is so, and look, if you do see an opportunity, you need to manage that trade correctly. Right, the last thing you want to do is be in a very choppy condition, take a trade and let it run too long, and that's where things could go very, very wrong very quickly. So, brilliant. Hopefully that made sense. Any questions? Obviously, just drop a message, and we'll catch up soon. Take care, guys. Bye bye.